Okay, today I'm going to be treating what market structure is all about. If you watch my previous video, you will see where I talked about tips and how you can become a successful trader. And this is my official class. This is the first class where I'm going to be teaching the strategy I use. And if you work with me, you're going to be understanding a whole lot of things here. So this is the first part, and today's topic is going to be market structure. So pay close attention to whatever I'm going to be teaching you tonight, because this is what you need in 2025, and I promise you that you get a whole lot of values from this. And wherever you're having issue after taking these lessons, okay, after going through all of this, make sure you drop a comment in the comment section asking your question. All right, so first of all, we want to be starting with what they call market structure, right? Market structure. Let me make the font to be a little bit bold. Okay, I think this is okay. Yeah, market structure. Now, if you have been trading before now, you will understand. You should already know what market structure is all about. Okay, whenever you hear the word market structure in forex trading, okay, you have to understand that market structure refers to analysis of price movement and trend to identify patterns. Okay, to identify patterns, support and resistance level. It's just basically involve studying the market behavior. Okay, just like you have a, yeah, the direction of price, the trend of the market, how to identify your pattern with market structure. So it's basically, market structure basically means the direction, okay, and the patterns of what you're trading, the trend of the market. So that is what market structure is all about. Okay, and we have the two types of market structure. We have the advanced market structure, right? We have the advanced market structure, advanced market structure, and we have the basic market structure. Okay, market basic market structure. Sorry. So we have the advanced market structure and we have the basic market structure. So these are the two type of structure we have, and I'm going to be illustrating the difference between these two and why you should start trading the advanced market structure in 2025. Okay, why the ad- why the advanced market structure has an upper hand over the basic market structure is what I'm going to be explaining tonight. And basically, the basic market structure is moved in a kind of way, right? It's moved in a kind of pattern whereby, excuse me, move in a kind of pattern. I'm going to be showing you the difference between those two and why the advanced market structure is more advisable for you to trade with it in 2025. Okay, so basically, when trading the advanced market structure, you have something like this. Let's say you have an uptrend going this direction. You have an high, higher low, higher 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 high, higher low. Right now, it will be easier for you to know that, okay, if price is moving in this direction from this point to this point, from this point to this point, from this point to this point, you can easily take your entry at this point here. Come here, take your entry. You take your entry at this point. Come here, you take another entry at this point. You're taking your entry at this point, taking more entry at this point, taking more entry at this point. Okay, now you see that if you enter a trade at this point, okay, and it hit your target at this point, you can easily enter more trade at this point. All right, hit your target. You see, you take your entry here, you take your full TP here, you take your entry here, take your full TP here, take your entry here. This is how the basic market structure move. Okay, move in a way that the market is move in a way that is more simple, okay, for you to identify your entry, your close, your support, your resistance level, and then you know that okay, if market is bearish, if market is bullish, you know the next place to take your entry. The higher high, higher low is creating a series of higher high, higher low, okay, but you begin to realize that you take more losses taking the basic market structure compared to the advanced market structure, in the sense that when you are taking your trade in this point, this higher high, higher low, higher high, higher low, your support and resistance level, okay, not that support and resistance doesn't really work, but if you are trading the basic market structure, you see that you will take more losses compared to when you are trading the advanced market structure, and this is what I'm going to show you in this video. So once you are taking this trade in this direction like this, you see that sometimes after you've taken this trade, your continuation, you enter here, you have a continuation, you enter here, you have a continuation here, enter, you have a continuation here, and you open your position. You see that all of a sudden price will drop, taking out all the trade you've entered, okay, and then you move, the price will move to the upside. Why does this happen? Okay, you may be saying sometimes it's manipulation, but it is not necessary manipulation. Okay, there are people that trade this advanced. This is why you need to trade the advanced market structure, because those people that trade the advanced market structure will always use those people that trade the basic market structure as liquidity. And what does liquidity means in the market? Liquidity simply means money. So if there's no money in the market cannot move. And that is why once you start trading the advanced market structure, you start to understand why the people that trade the basic market structure, okay, take more losses than those that trade the advanced market structure. Okay, you know, in forex, if you are having a low, for example, this break of structure, okay, a low like this, whenever you're having a low, okay, higher high, higher low, higher high, higher low, you see that price is creating liquidity. Okay, this is liquidity right here, this is liquidity right here, this is liquidity right here, this is liquidity right here. For price to keep moving, if there's no money in the market, price will not move. So people that are trading this basic market structure is what the market will always use as liquidity for you to move to the other side. So pay close attention to this point. All right, so right now all this higher high, higher low, higher high, higher low, they are all liquidity. Okay, and once price strip the liquidity, price has taken all the money, that is when it will have more momentum to move. And this is why the basic market structure, the advanced market structure, has an upper edge over the basic market structure. Right now, what is the advanced market structure? Okay, the advanced market structure is simply you trading off the structure and its liquidity. Okay, so you're trading the basic market structure, move using it with liquidity for you to have a clearer trend. Okay, you have a perfect trend in the market. Okay, so in this video I'm going to be explaining to you what the advanced market structure is all about and how you can also have a clearer picture of what I'm talking about. So let me clear this. So what is the advanced market structure? In the advanced market structure, it basically comprises of your structure, your liquidity, your POI, your entry and your exit, just like the normal way of trading. But this has its own rules. Okay, and after listing these rules for you, because the advanced market structure has 5 rules, and these 5 rules is what guide the advanced market structure differently from the basic market structure. And once you abide by these 5 rules of the advanced market structure, this is when you are going to get a clearer picture of it. And if you abide by this rule, you see that your win rate will increase drastically than how it used to be. So pay close attention why at least the 5 rules of the advanced market structure and how you can also use it in your trading. All right, now let's move on. The 5 rules of the advanced market structure. The 5 rules of the advanced market structure. Okay, so we have rule number one. Let me make it more bold. Rule number one, there must be a sweep of liquidity. Okay, sorry. Rule number one, there must be a sweep of liquidity. Rule number two, price must sweep the liquidity to the opposite direction. Price must sweep the liquidity to the opposite direction. All this thing I'm saying, I'm going to give you the pictures of the chart and show you what these rules mean, and I'm going to be explaining it to you using the chart diagram. So all I want you to do right now is write down these 5 rules of the advanced market structure while I explain it for you so that you have a clearer understanding of it. Rule number three, there must be a 50% retracement to be taken out later. Rule number four, there must be another break of structure. And rule number five, price must sweep the newly created liquidity liquidity and continue its movement to the opposite direction. Okay, so this rule number two simply is not price must sweep the liquidity to the opposite direction. Price must break structure to the opposite direction. Price must break structure to the opposite direction. So these are the 5 rules of the advanced market structure. Rule number one is there must be a sweep of liquidity. Rule number two, price must break structure to the opposite direction, which is the first break of structure. Rule number three, there must be a 50% retracement to be taken out later. Rule number four, price must break another structure, which means the with the roots of the advanced market structure, you need to have two break of structure. And rule number five, price must sweep the newly created liquidity and continue to the opposite direction. Okay, so this is the diagram. So first rule number one must be a sweep of liquidity. Okay, there must be a sweep of liquidity. Alright, now this is the liquidity. This higher high is the liquidity. So if I move this now, this liquidity has been sweep, which is first rule number one. There must be a sweep of liquidity. Rule number two, price must break structure to the opposite direction. Price break structure to the opposite direction, which is your first break. Right, this is your first break. Rule number three, there must be a 50% retracement to be taken out later. So from here to this point, you must have a 50% retracement. Okay, which is your 50% retracement right here. Rule number four, there must be another break of structure, which means this structure needs to be broken. Alright, so there must be another break of structure. Alright, so this is the first break, break number one, break number two, and five. The fifth rule is price must sweep the newly created liquidity and continue to the opposite direction. This is the newly created liquidity. So what will happen? Price will sweep this created liquidity, and what will it do? Continue to the opposite direction. So this is exactly the five rules of the advanced market structure. Okay, so now this is your first break. This is your first break. This is your second break. This is your second break. Alright. Now, this is the rules of the advanced market structure. This is how the market move. Okay, this is how the advanced market structure move. Okay, so you might be having something like this. You might be having something like this. So this diagram this way, you might be having something like this. Sorry, you might be having something like this way, this way. This is the rule. Okay, if you're having something like this, then price might be moving this way, moving this way, moving this way, moving this way, moving this way. Then you see, so people that are trading the basic market structure, they are taking entry, taking entry, taking entry. So all of a sudden you see something like this. Then you see what just happened. This is the rules of the advanced market structure. This is your first sweep. Okay, this is your first break. This is break of structure to the opposite direction. This is a 50% retracement. Now price, anyhow price move, price will still come back into this zone. Alright, take out the 50% retracement and then go back to its direction. So this is how the advanced market structure move like. Okay, so you always have a setup like this. Alright, this is it. You have something like this. This is it. So the 50% retracement, where price is coming from to sell, is called your POI, your point of interest. Okay, so you see that price will move, 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 and then come back here and then sell off. Okay, just the same thing that happened in this place. That's the same thing that happened in this place. I believe you're understanding right now. Okay, the same thing that happened here. You'll have seen this on the chart several times. And then price will come, price will move. After giving you these five rules, right? Once you see this, there's no way you can unsee it. Once price has given you this five move, your five rules, the five rules of the advanced market structure, and you spot it, you identify it, okay, then you see that price will give you those five rules. No matter how price take, no matter how long price take, price will always come back here and then sell off. All right, so this is what the advanced market structure is all about. So what I want you to do today is study these five rules of the advanced market structure. Okay, there must be a sweep of liquidity, price must break structure to the opposite direction, there must be a 50% retracement, which is this, price must break another structure to give you a second break of structure, the price must sweep the newly created liquidity and continue to the opposite direction. Now with this, there's what we call the A plus setup. This is the A plus setup for the advanced market structure. There's also a B plus setup. The only difference is that B plus setup has B plus setup has just one break. Okay, now this is the setup, this is the advanced market structure rules for buy, for selling when you want to sell. So I'm going to also give you the advanced market structure rules when you want to buy. So this, the same thing you do when you are selling, the same thing you do when you want to also buy. So let me just give you a clear structure of when you want to sell. Okay, now when you want to buy, sorry, the first one was when you want to sell. So when you want to sell, this is how the structure is. Sorry, when you want to buy, okay, so it come like this, and then this is it, then this is it. Okay, rule number one, check, check. Rule number one, this is your first break, this is your second break, this is the 50% retracement, this is your liquidity that has been swept. Okay, this is the retracement that come and take it out later and then move to the opposite direction. Okay, so this is basically the rule. Sorry, it's the same thing you have whenever you want to buy. Okay, this is the same structure you have for the buy structure. Whenever you want to buy, this is the same structure you are going to have. All right, I believe this is simple enough. Okay, in my next video I'm going to be showing you this same thing on chart. Okay, I'm going to show you the one that play out. Okay, now I'm going to show you the potential one that is also going to play out. Okay, so this is it. This is exactly the advanced market structure. This is how the big boys they make money in the market. So sometimes, let's say you are trading support and resistance and all of those things, the basic market structure. Okay, you see that price has given you this basic advanced market structure already. Okay, and then you see that price is moving like this, price is moving like this, price is moving like this, price is moving like this. You think you're buying, you're buying, you're buying, and you're happy. All of a sudden, you see that price starts selling, come back to this zone, and then buy off. And you start thinking it's manipulation. It's not necessarily manipulation. It's because all those higher high, higher low are created, are called liquidity. So price need to take out this money and continue moving to its direction. Okay, so this structure is advanced market structure. Okay, no matter how price move, price will always come back to that zone, to that structure, and take out the newly created liquidity and move to its opposite direction. This is how the big boys in the market trade. This is how the banks, okay, trade. That is why it is called the advanced market structure. Okay, the advanced market structure. You can see this is how exactly an A plus for advanced market structure. So in my next video, I'm going to be showing you a clear example of this analysis of this presentation on a chart. So if you watch to this point of the video, don't forget to subscribe, okay, share this video, like this video so that more people will see it. And if you're having any confusion, okay, you can just ask the question in the comment section, why I will attend to you. Okay, so